Hello, welcome back to Making Money Manageable with Alan Dembski and Juliana Janson from Buffalo First Wealth Management. Today, we have a question that comes up an awful lot as people are nearing retirement. And the question is, should you pay off your mortgage when you retire? Now, there's a lot of debate with this, and we'd like for you to like and share our videos and leave comments, if you will, on your thoughts of this topic. But we're going to start off because I think this is probably on a regular basis, this
Yeah.
topic.
Yeah. Yeah. I think, one of the things that we work through with our clients is if you're on the side of wanting to pay it off, the question is, what is your emergency fund situation? What are your savings looking like? So we really like to see our clients have funds in a non-qualified, meaning it's not in an IRA or a 401k. It's just in either a brokerage account or a regular old savings account, so that if something does come up, you have a house expense or some other expense that's not expected, you can pay for that out of your emergency savings. And then on the other side, if you want to continue to pay your mortgage, the question becomes, can you afford comfortably to continue to make those sometimes large mortgage payments?
Yeah, and interest rates of your mortgage have a lot to do with it as well versus any other debt. Is your mortgage probably your largest payment per month? I would venture a guess and
Usually.
say, yeah, for most people. But am I carrying other debt when I retire? And how much debt do I have? And what's the interest rate on that? If you look at the average credit card, you're probably 25 to 30% interest, even if you're carrying a small balance. That adds up quickly. So you got to kind of weigh, and that goes back to the emergency account. If I pay off my other debt, what do I have left over afterwards? Do I have enough for emergency? Do I have a month for or enough for those monthly payments? And also, we've lived in the last couple of years in a high interest time period where maybe my interest on my savings or my cash account is paying more than what the interest rate is on my mortgage. Where if leaving that money in, I can use some of that interest per month to pay down my mortgage debt.
Yeah, it sort of becomes a math problem in that instance in terms of whether or not it makes sense to, especially if you were lucky enough when the mortgage rates were super duper low to get a low, in the twos. Some people even have mortgage rates in the twos. Then it's
Yeah.
mathematically better sometimes to just leave it in your savings. But I think the other question is, if you decide I'm going to pay this mortgage off, and you find that you do need to take a loan out for another purpose. Maybe you decide that you're going to get a second home or an RV, and you don't have the funds to pay for it readily. It might be a little bit more difficult once you're fully retired to take a loan out. So if you are lucky enough to have a low interest mortgage or even a lower interest mortgage, sometimes it's better to hang on to that, especially in the early years of retirement, until you see what your cash flow is and what your expenses are and what you want to spend in retirement, to hang on to that original mortgage rather than seeking out additional loans down the line.
Yeah, and I'm actually going through this right now with a client and the biggest question becomes taxes. Taking money from different investments to pay off that mortgage is a huge concern. When you start talking about if I take it from an IRA, that it's counted back in as ordinary income or a brokerage account, I might be being taxed 15%. Now, a lot of these are different, and that's why people call us to help them with doing the math on all this. If I take money out of this spot, how much is it going to cost me? Because paying off that, let's say, $100,000 mortgage, but I got to take out money out of my IRA. You're going to have to take out about 150 just to cover taxes, without ever knowing all the situation. But it's going to cost you money in those taxes, and eventually you're going to lose the mortgage deduction. So if you're itemizing now with the one big beautiful bill and allowing people to itemize, not having that in, is going to increase your overall tax bracket as well.
So, all of those tax implications and mathematical implications aside, sometimes people come to us and there's an emotional component to it. They realize that their income is going to be lower in retirement, and they really just feel better having that home paid off. And that's another thing that we take into consideration with our clients. Even though it might be mathematically better to pay it off, or to not pay it off, sometimes if it's just going to bother you or keep you up at night, that has to be factored into the conversation as
Yeah.
well. And we definitely do that with our clients if somebody feels really strongly about it.
Absolutely. And the other thing I did forget to mention was budgeting for property taxes and insurance. So if you're in a high tax state, property tax state, your property taxes could run you $500-600 a month. And if every 6 months when you get those property tax bills in, you got to make sure you're diligent in saving that money, even though your mortgage is gone. You're still going to have those tax payments, and where are you going to get that money from if you're not saving on a regular basis
And some
for
people don't
this?
want to worry about that. They want it to just be automatic. So, and 500 is low in some instances. It
Yeah.
could be well in excess of $1,000 a month or more, depending on where you live and what your taxes are.
But financial planning helps with those emotional aspects of things to help understand, before you retire and pull that trigger, is to start understanding where's the money going to come from? How are we going to do that in the best way? And what does that leave us afterwards, to pay those tax bills, to help with those emergencies? You know, yes, you could probably go on Google, should I pay off my mortgage? And you're probably going to get, yeah, you should, but it doesn't take into account everything else when it comes time to actually pulling the trigger on that.
Definitely.
Well, if you have a comment or an experience with paying off your mortgage, whether it was a right decision or a bad decision, we'd like to hear from you, and any other topics that you might have for us.